So let's take a look. So everybody wants to pump as much oil as possible to maximize revenue. And we're talking about the big producers. The U.S. is a big producer, Saudi Arabia. I'm in the United Arab Emirates right now. They're a big producer. Russia, et cetera, et cetera. You know all the names. So fact number one is everybody wants to pump as much as possible, but including Iran. So under Trump, there was all the sanctions on Iran. So Iran still sold oil, but they had to do it in, let's call it a black market. So they would transship it through another country, and then it would become that other country's oil rather than Iranian oil. Under the new Biden administration, we're seeing less pressure from the EU and the US. The EU never really put that much pressure. So we're starting to see more of Iranian oil come more back into the white market as well. So we're going to see a little bit of increase in Iranian oil. Venezuela and Mexico will continue to produce less due to deteriorating production capabilities. One of the things that people never really remember is that 80% of oil is pumped by governments, not pumped by the free market. In fact, really only the United States and a little bit of North Sea oil is free market oil. All the rest of it is government controlled. So what happens is, and this is really happening a lot in Venezuela, Mexico, to a certain extent in Iran, is that governments think short term. So what they do is they pump as much oil as they can, forgetting that they have to maintain their equipment. They have to always be spending money to upgrade their equipment, to repair their equipment. Venezuela and Mexico don't do that. So as a result, every year they produce less oil. Venezuela has the largest oil reserves in the world, and guess what? They don't pump a lot of oil anymore. So they're declining, even though they used to be major suppliers. So they're going to produce less oil, and that'll offset Iran. Russia is going to produce about the same. The UAE will produce about the same. Now, at $60 a barrel, some U.S., and we're about 65 right now. At $60, some U.S. production will come on the market. We'll see new production come in because at $60, some U.S. producers can make money. At $70, you'll see a lot of production come back on board. Okay, so to a certain extent, that's going to probably cap oil prices at around $70, but we'll come back to the scenario. So the real question is, what about Saudi Arabia? Because the two big swing producers are the U.S. and Saudi Arabia. But the U.S. is driven purely by economics. At $60, they can produce some. At $70, they can produce a lot and make money. So Saudi Arabia will remain the key swing producer. Now, they're going to try to keep prices, I think, around the current level or a little higher. They want the price to be as high as possible because they need money a lot, but they want to keep the U.S. out of the market. One of their big plays over the last year was to try to reduce the price to a point where the U.S. producers aren't producing because they can't make money. Saudi Arabia wants to be the only key swing producer in the world. So $65, they may want to keep it right here. They may try to get it up to 70 and see if the Americans come back or not. We'll, of course, keep a very close eye on that for you.